carries.
Joe, nice seeing you.
Thank you, Norm. Thank you.
Nice to see y'all.
Appreciate you taking our abuse.
Or you want me, when you don't get it, it's what you gotta worry about.
Okay, see you.
See ya.
Thanks, Norm.
All right.
All right, so Mayor Pro Tem Houck has informed me that we're gonna go back to number 8. I specifically wanted to miss the delinquent tax collections and turnover report from Corey. That was my request. No, I do wanna thank everybody. Sorry I was a little late today, just a little late day at work, but, thank you for the council for, getting it started, and thank you for Corey for showing up in a suit and everything, so.
Close, yeah. Mayor, council, thank y'all for letting me come tonight. I would note the last time I was here, we had 3 reports to go over, and it took nearly an hour, and Marvin told me if I did that again, I'd be fired. So I'm gonna cut this down to about a half hour. Do you all have our delinquent tax, it's a turnover analysis and a collection report in your packet? Okay. I brought some just in case. Really, the story of what's happened the last year, y'all know about, obviously, the limitations from COVID. This report looks at July 1 of 2020 through July 30th of this year. During that time period, businesses started to reopen, but we saw a huge increase in taxpayers that could not make their payments before June. So all across the county, we saw a 20% increase in turnover, accounts turned over to us as delinquent, except in River Oaks. We actually saw a decrease. 2 years ago, $60,000 was unpaid when it came to us. Last year it was $57,000, and this year it's $53,000. Not so great for us, but that's a great thing for y'all. That means your current collection rate is continually improving, and you know that each year, your valuations are increasing. So your total taxable revenue that you should be receiving is actually increasing. So the pie is getting smaller. That's a good thing for the city to have. Because of everything that happened last year, the courts were very hesitant on a lot of the work we did to take judgment. They really wanted us to work with individuals, both before filing suit, and then if we did, they were giving us a whole lot of leeway and not forcing us to go to judgment if anybody appeared. And then, of course, if somebody didn't appear, the judges were reluctant to give us a judgment because they thought, well, maybe it's because they're afraid of appearing because of COVID. So we basically did not take a lot of judgments. We worked with a lot of people, extended payment agreements, and ended up basically at the same, a little higher tax collection rate last year than we did the year before. So it worked out really well. We were very sensitive to the needs of the community during this last year. We actually kept our office open. We sent about 10 people home, spread everybody out, and just called every delinquent taxpayer that was a resident and said, if you are delinquent and you need some time, let us know. We knew if we could just get them to start making some payment and keep that communication line open, they'd take care of it. This is a one-off deal, right? This wasn't hopefully, right? This wasn't some sort of, right? That's what we thought, and it did actually work out. I think giving people that leniency worked out. In your packets, I provided the top 25 delinquent accounts. The top 2 were paid, and everything else is either in a payment agreement or it's in a lawsuit. And of course, if they owe the city $1,500, they owe, between the school and the county entities, they're owing closer to $7,000 or $8,000. So at that point, it does raise the element of the time of need a lawsuit. So there's not a whole lot to the story about what happened last year because all we did was we just worked with everybody. What I did want to tell you about the collection side, though, is you hired us January 1, 2016. So this July marked 5 years of collections. And we look at collections from a July 1 to June 30th calendar. And I know that's different from calendar, from your financial year, but that's the turnover to 1-year collection cycle. And so I just wanted to kind of report to you that in those 5 years, our average collection rate is 74.92%. That means of what's turned over that year, we collect nearly 75% of that on average over the last 5 years. The 5 years prior to that, your average was 61%. We have seen a tremendous increase in collection of your accounts, including the older accounts that are outstanding. We put a lot of work into that those first few years and cleaning that up. And so we're excited about that. That's most of the story about the collections. Are there any questions about that? On the turnover, I briefly mentioned that your turnover actually decreased. If you look on, in the report, it's the, it's the page that's titled 2021 Taxable Turnover Analysis. You can see the July 2021 turnover, which is the 2020 tax year, was $53,000, and the year before was $57,000. So again, another decrease, and not an insignificant decrease. I mean, you're close to 5% at that point. We we're gonna be doing the same thing we did this year on those accounts. A lot of them are residences, and so we're gonna keep working on those, because we understand there's a lot of people that are still in the same situation they were in last year. One thing I wanted to also provide a little update on is utility collections. We've been working on that, and there's been some delays, and I want to give you an update. So previously, we were given, 263 cases worth about $32,000, and there was an error that created a bad debt classification that was causing some issues on whether or not it was collectible or if there was an issue with the collectability. We've gotten restarted now, and the utility department sent us another 178 cases worth about $26,000. I want to give you kind of a little overview of utility issues for a second, though. Utility collections are very low collectability. On your delinquent taxes, if you don't pay, there's a opportunity to foreclose a lien and sell property. We do not have that hammer on the utility accounts, and generally these people are struggling in so many ways that there's not a lot more juice to squeeze. Some of these accounts are going to be past statute of limitations, and we're going to scrub those and pull those out, and then we're going to pursue the rest of them. There's one set of delays that's going to get everybody in River Oaks that's owed, not in River Oaks, supposed to not live here anymore, but anybody that has owed utility accounts to River Oaks, we are going to send them on the city's letterhead what we call a dunning notice. This is a notice that says your account is going to be turned over to collections if you don't pay within 30 days. They'll send that, we'll pay for that, it'll be sent out on your letterhead because technically it's a city letter. And then starting November, there's new rules on these types of debts. These are Fair Debt Collection Practice Act debts. And so we have to send a debt verification letter. So we're gonna send that out, and then we'll start sending collection notices after that. We get paid from what is collected, but what we're gonna probably do is we're gonna look at the accounts as they come and see how that works, because if they're small accounts, we're not gonna worry about those. If it's bigger accounts take more work, then we'll come talk to you about that. And I say we'll talk to Marvin about that. I will just kind of set some expectations. Utility accounts are very low collectability, especially things that are more than a year or two old. We do not report these individuals to credit agencies. We've never believed it's appropriate, and finally, 31 AGs across the nation sued the credit agencies and said that these are not appropriate, so these can't be reported. We don't do that, but we do pursue them, and if they become large enough, we will pursue them with litigation. I kept it under an hour, but I don't want to exclude the opportunity for questions if there are any, because I know I kind of covered a lot of areas there.
Have any
So
questions?
these utility accounts, those are people that are former residents and new joined, is that right?
Yeah, yes, sir. Almost all of, is that Mr. Holland?
Yes.
Mr. Holland, I believe all of your delinquent utility accounts are going to be former residents. If they're delinquent, their water is cut off 10 days after non-payment, and then 10 days later that bill is finalized out, and then we would be sent that account 30 days after that. So these should all be non-residents. If they come back in, Blythe and the ladies in your utility department are checking to make sure they don't have delinquencies, and they're checking driver's licenses and other identifiers to make sure that they're not coming in and just starting a new account.
Good. And how does that work if they try, what is our ability to restrict that?
You are entitled to ask them to have them pay before they set up a new account.
If we can prove avoidance.
Then the improvement in the tax, delinquent tax collection, you said it was, it's percentage, it's really improved. What do you attribute that to? Different tactics you're using, or what?
I would attribute that to the type of process we use in collecting the delinquent taxes. So we've got 48 people in our Fort Worth office that handle Tarrant County. We represent 85% of the taxable value in Tarrant County. We file 4,000 to 5,000 suits a year. So to do all that, we have to have a pretty robust process. And so our system is really acutely programmed to queue up accounts and then move them forward. Queue them up, move them forward. So they're constantly being moved. Our staff are constantly moving them forward. So that means that if we do ever get into litigation, we're moving forward and we're getting to judgment with ultimately, if you have a taxpayer that lives at the property or is close to the property you're communicating with, that judgment is often what it takes to get payment. If that doesn't get payment, then you can go to the tax sale, which over the last 5 years, tax sales in Tarrant County have resulted in almost 100% sale of properties. We're seeing very few struck off properties right now. The other side is that we have a pretty robust business personal property and bankruptcy